Yes, thank you so much. Oh, excellent. Excellent way to start the day. Ladies and gentlemen, let's get going. Team Black Rock, Black Stone. What we do. And we are going live. I'm going to be out of the markets till Monday morning. I'm gaining my voice back. Hopefully by Tuesday I gain my voice back. Um, Connect real quick. Have to turn on the loud and saver. And the Matrix, baby. Okay. Sending everybody the link right now. And that way everything is cool. Mm, I think for today we're gonna work on a quick module that's See where we go. Let me load up the news though. Markets. Excellent. Size markets. Check futures. Check something real quick. Funds, futures markets. That's Bloomberg. Let me see what they're talking about. Bloomberg. 4, 5, 6, 7. Okay, let's do a quick decision making. We're gonna go. Let's go leadership skills. Mm, We're gonna go leadership style matrix. That'll be the module for today, and we're gonna do the markets right after. So, good morning, Team BlackRock and Blackstone. This is what we do. Protect Philippe is on deck. Make sure it's on the camera. We got the Turbillion, full skeleton. Right on with that, you heard me. Tell them haters, I said, get your mind right. Get your mind right, you heard me. Can't be a hater your whole life, man. All right, shout out to my business partners, my loved ones. We're going to take off. It's not my main mic, but what can you do, right? All right, here we go. Choosing the best leadership approach. When you're new to managing people, it can be hard to choose which path to take. When you start to manage new people, how do you know which leadership style you should use? There are a number of things that determine this. For example, does the work have scope for creativity, or does it need to be completed in a specific way? Would you choose management, or would closed management be best, or should you encourage your people to work independently and deliver a finished product? Different people and different types of projects need different leadership styles. But how do you know which approach is best for each project, person, or situation? In this article, we'll look at the leadership style matrix, a model that helps you decide. Here's an overview. Eric Flamholtz and Yvonne Randall developed the leadership style matrix and published it in their 2007 book, Growing Pains. The matrix showed in Figure 1, the matrix shown in Figure 1 helps you choose the most appropriate leadership style based on the type of task you're involved with and people you are leading. Number 1, high programmability, low job autonomy, autocratic, benevolent, autocratic style. Number 2, high programmability, high job autonomy, consultative, participative. Number 3, low programmability, low autonomy, consultative, participative. Number 4, low programmability, high autonomy, consensus, laziest, faire. The leadership style matrix is divided into 4 quadrants. Each quadrant lists 2 leadership styles that are best suited for a specific situation in person or group. The y-axis defines the programmability or the task. A programmable task has specific steps or instructions to complete. A non-programmable task is more creative. It's up to the individual to decide how best to accomplish it. The x-axis describes the individual's capability and preference for autonomy. Several factors influence this, including education, skill, motivation, and their desire or feedback, interaction, or independence. For instance, a person with a high level of education, skill, motivation, and independence is likely to want autonomy. Someone with low motivation and skill will need and may want more feedback and interaction so that he or she can complete the task successfully. Using the model. To use the model, first look at the y-axis. If the task must be done in a specific way, or if it has specific steps, then move lower down the axis. If the task is more creative, or if the procedure will change depending on individual input, move higher up the axis. Next, look at the axis. If the people you're leading prefer to work alone, move right on the axis. If they need more instruction and interaction from you, move to the left. The quadrant that you fall into lists the 2 leadership styles that are most likely to be appropriate for your situation. Applying the model. Let's look at each quadrant and the corresponding leadership skills in detail. Quadrant number 1, high programmability, low job autonomy. Sometimes you'll be in charge of a task that must be done in a specific way, or that needs to be completed by a team that needs a great deal of motivation, guidance, feedback, or interaction. In these cases, a directive leadership approach is most effective. There are 2 styles you can use here. Number 1, autocratic. The autocratic style is sometimes criticized because it seems outdated. This leadership style is authoritative. You issue instructions without explanation, and you expect team members to follow them without question. Although it might seem repressive, this style can be effective in some situations, especially when your team depends on your leadership and feedback, and when the work must be done in a specific way. It's also effective in a crisis or emergency situation, or when you're dealing with very significant risks. It's important to strike a healthy balance when using this leadership style. You need to lead with strength and assertiveness, but it's also important to lead with kindness. Don't forget that your team members depend on the feedback that you give them. Praise their good work regularly and give them constructive criticism on how they can improve. Number two, benevolent autocratic. The benevolent autocratic style is similar to the autocratic style. However, this approach is more participative. For example, instead of just issuing instructions, you also explain the reasons behind the instructions. Use this style successfully. Communicate the reasons why your team must follow your instructions. For instance, explain rules so that members of your team understand the reasons behind them. When they understand why certain rules or procedures are in place, they're more likely to follow them. As your team is working, practice management by wandering around so that you're available to answer questions and provide feedback. This visibility and support will help you keep your project on track and show your team members that you're there when they need you. Quadrant number two, high programmability, high job autonomy. When the task that you're delegating must be completed in a specific way, and the person that you're delegating to wants to have autonomy in his or her work, you can use either a consultative or participative style of leadership. Number one, consultative. You use a consultative leadership style when you ask your team members for their input and opinion, but you still have the final say. You consult with the group, yet you're responsible for choosing the best course of action. To use the consultative leadership style successfully, build trust in your team. When trust is present, your team members will feel comfortable offering their opinion and reacting honestly to issues. Be open to the ideas and suggestions that your team members provide. If you criticize or dismiss your team members' suggestions, they'll quickly stop speaking up, especially if they suspect that you've already made up your mind. Keep an open mind and be willing to change your opinion if someone presents a better idea. Number two, participative. The participative leadership style is similar to the consultative style, where you still have the final say in a decision. However, the participative style goes a step further. You depend on your group to develop ideas, not just offer opinions on an idea. The participative style is more about group problem solving and brainstorming. To use the participative style successfully, use group decision making and group problem solving tools to ensure that each person's voice is heard equally. Our article on organizing team decision making will help you develop team decision making strategies. Keep in mind that while you're dependent on your team members for their input, You still need to guide the discussion. You need to communicate goals and you need to make the final decision. Make sure that everyone on your team understands your role in this process. Quadrant number three, low programmability, low job autonomy. Here you're reading and leading a highly creative project with a person or with team members who don't want autonomy. Instead, they need direction, input, and interaction. The two leadership styles that best fit this situation are consultative and participative. These are the same leadership styles that fit best in quadrant number two, which is high programmability, high job autonomy. Number four, quadrant four, low programmability, high job autonomy. You fall into this quadrant when you're assigning a creative or loose project to a person who wants freedom and independence to work. This means that you need to take a non directive leadership approach. There are two styles that you can use here. Number one is consensus. One option is to use a consensual leadership style. Essentially, this means that you're going to give your team members a great deal of authority in the decision making process. Instead of being the boss, it's almost as if you become part of the team. Ensure that your team member understands his or her responsibilities when you use this style. Number two, laissez faire. Laissez faire is a hands off leadership style that you should use carefully. You give team members freedom over how and when they're going to do their work, but you're there if they need resources or help. You should only use laissez faire leadership in the right situations, and you should avoid taking this style to the extreme. However, when you're working with someone who is highly skilled, motivated, and intelligent, using this leadership style can be very effective. To use laissez faire successfully, make sure that you delegate the right tasks to the right people. A mismatch between the task and the individual will likely mean that the team member needs additional help from you and that they may not thrive. Here's a tip. This is a useful framework for deciding which leadership style to use for your situation, but there are several other tools that can give equally valuable perspectives. For example, Path Goal Theory looks at leadership styles that are appropriate for different individuals and different situations. Explore all of these before you settle on your preferred leadership style. Here are some key points. Eric Flamholtz and Yvonne Randall developed the Leadership Style Matrix and published it in their 2007 book, Growing Pains. The Leadership Style Matrix is a simple and useful model that helps you choose the most effective leadership style for your situation. To use the model, first look at the task or project. If there are specific programmable steps to follow, move down the y axis. But if the project or task is more creative, move up this axis. Next, look at the people that you're leading. If they want autonomy, move right on the x axis. If they need instruction, interaction, or feedback from you, move left on the x axis. Once you have determined the quadrant you fall into, you can choose from the two leadership styles that are most appropriate for your situation. So, just to give you guys a brief background, yesterday I made a decision with an investment that I was considering, and I potentially used every single quadrant to make my final decision. Um, Lasis Fari was probably the definitive factor, although I tried to run the potential investment um, with a benevolent, autocratic leadership style, but it also had qualities of being consultative and participative. And it wasn't a consensus of low or high programmability. It was more about testing the integrity of the individuals involved. I made a decision to shut down the project immediately, not only because I'm the boss, but because I own the company and I'm the one that pays the taxes. I'm the one that takes the overhead. I'm the one that's making the investment. I'm the artist, etc. And I don't let anybody play with my emotions. I'm very firm, but I'm very, very fair. And if I have to put the battle axe down, it's no problem. It's gonna cut like a guillotine. So I measured 12 times, I cut once. And I leave you with that. All right, we're making good time. Kind of wanted to plug in, but you know what? Let me see how we're doing on power. Not bad. All right. So here we go. We're gonna start with Bloomberg, and I apologize. Let's go to CNBC.com. Give me 1 second. All right, so here we go. You guys ready? Okay. Asia Pacific stocks were mixed as investors look ahead to U.S. jobs data that could set the tone for the Federal Reserve's next move for interest rates. The index was last trading 2.1% higher. Hong Kong's Hang Seng Index last traded 1.37% higher after jumping over 2% earlier. Australia's S&P ASX 200 traded 0.41% higher to close at 6,954 and 2 cents. South Korea's Kospi added 0.21% to end at 2,408.73, and the Kosdaq rose 1.92% to close at 816.39. In Japan, the Nikkei 225 slipped 0.26% to end at 30,994 and 67 cents. China's markets remain closed for the week-long holiday. Overnight in the United States, all three major indexes slipped slightly as the Dow Jones Industrial Average shed 9.98 basis points, or 0.03%, to close at 33,119 and 57 cents. The S&P 500 dipped 0.13% at 4,258 and 19 cents, and the Nasdaq Composite traded down 0.12% to end at 13,219 and 83 cents. Please log on to cointelegraph.com by Marcel Peckman. Three reasons why Bitcoin is struggling to rally above 28,500. Bitcoin started the week with an uptick in investor sentiment, but there are no, I'm sorry, but there are three major factors preventing BTC price from recapturing the $30,000 level. On October 2nd, the price of Bitcoin saw a 5.5% intraday increase to 28,600, but the largest cryptocurrency by market capitalization lost momentum as the highly anticipated launch of Ether futures exchange traded funds failed to generate significant trading volumes. While the recent rally into the upper end of the current price range was likely encouraging to investors, recent comments from United States Federal Reserve representatives reiterated concerns about an impending economic downturn. Bitcoin demonstrated short term strength by maintaining support at $27,200 on October 3rd and subsequently surged above 27,500 on October 5th. Nevertheless, three key trading metrics indicate a lackluster level of support. These metrics encompass spot market volumes, derivatives, and confidence in the approval of a spot Bitcoin ETF. Macroeconomic forces exert downward pressure on Bitcoin price. On October 2nd, United States Federal Reserve Vice Chair for Supervision, Michael Barr, stated in New York that he anticipates a slowdown in economic growth below its potential due to higher interest rates constraining economic activity. He also noted that the full impact of the current monetary policy has yet to be realized. According to the CME Fed Watch tool, the market is currently evenly divided on the possibility of another interest rate hike by the Fed in 2023. On October the 3rd, the real yield on U.S. 10-year Treasuries, a measure that adjusts for inflation, reached 2.47%, its highest level in nearly 15 years, according to data from the United States Treasury Department. This development partly explains the US dollar's index, DXY, reaching its highest point in 10 months. Additionally, Reuters reported that the US has become a relatively more appealing investment destination due to its resilient economy, boasting stronger growth prospects when compared with Europe and China. Bitcoin trading metrics show diminished activity for leveraged longs. Bitcoin monthly futures typically trade at a slight premium to spot markets, indicating that sellers are asking for more money to delay settlement. As a result, BTC futures contracts should typically trade at a 5 to 10% annualized premium, a situation known as contango, which is not unique to crypto markets. The BTC futures premium continues to trade below the 5% neutral threshold, remaining in the neutral to bearish range. This indicates a lack of demand for leveraged long positions. Additionally, spot trading activity on traditional exchanges has declined to levels not seen since late 2020, signifying reduced participation by institutional investors. It's worth noting that the decrease in trading volumes may be attributed to major US based trading firms such as Jane Street Group and Jump Trading distancing themselves from the cryptocurrency markets ahead of May 2023. Bloomberg reported that the primary reason for this shift was heightened regulatory scrutiny, which rendered the markets less appealing to institutional investors. Investors' expectations for spot BTC ETF drops. One of the factors supporting Bitcoin's 68% gains in 2023 is the anticipation of approval for a spot Bitcoin ETF by the United States Securities and Exchange Commission. However, despite the regulator's multiple postponements, the recent launch of the Ether futures based ETFs on October 2nd saw lackluster demand. Furthermore, despite a favorable court ruling for the conversion of the Grayscale Bitcoin Trust into a spot Bitcoin ETF, continues to trade at a 19% discount compared with its Bitcoin holdings. This data indicates a lack of confidence in the approval of a spot Bitcoin ETF, as investors will have the option to redeem their shares at par value following the conversion. Ultimately, Bitcoin was unable to surpass 28,500 resistance level, and Federal Reserve representatives warned of impending economic pressures. Consequently, the prospects of breaking above this resistance in the short term appear less than favorable. I agree 100% that I disagree 100%. Bitcoin enters quiet bull market as safe haven from bond market turmoil, analyst says. Investment research firm ByteTree upgraded Bitcoin's price outlook to bull from neutral as the crypto benefits as a safe haven amid an equity and bond sell-off. By Christian Sandor. Bitcoin briefly surged above 28,000 during Thursday's U.S. morning hours, then dropped to as low as 27,300 as traders took the opportunity to sell the rally. The largest cryptocurrency by market capitalization was changing hands at 27,500 recently, flat over the past 24 hours, but still outperforming the wider crypto market. The CoinDex Market Index (CMI), which features a broad basket of digital assets, was down 0.3%, while Ether slid 1.8% over the same period. In the near term, I expect the market to sell into this rally. John Glover, Chief Investment Officer of Ledden, told CoinDesk in an email. In the absence of new capital flowing into digital assets, I believe that this is what this rally will be, short-lived. Glover expects a more durable depreciation and a more durable appreciation will materialize later this year and early next year as Bitcoin appears to be finished with its corrective move. I do believe that Bitcoin prices will be higher in 3 months than they are today, as technically we've completed the sell off, and I now look for a sustained rally into Q2 2024, he said. Bitcoin as safe haven from surging rates. Investment research from ByteTree upgraded its Bitcoin market signal from neutral to bull in a report on Thursday. The crypto's recent price action has defied a rough period for traditional financial markets, offering a safe haven from a rout in equity and bond trading. Bitcoin futures look good, especially when you compare them to the crisis in the bond market. Charlie Morris, Chief Investment Officer of ByteTree, said in the report, it is the true safe haven from Uncle Sam's bonds. He pointed out that BTC is beating the US stock market at a time when surging bond yields wreak havoc on traditional markets. When interest rates peak, and the bond sell off ends, Bitcoin will be off to the races, he said. Morris noted that during Bitcoin's latest corrective move, the crypto held above the key $25,000 level, which capped the price between May 2022 and March 2023. If we can hold that $25,000 level, which we probably will, Bitcoin is very much in a bull market, albeit a quiet one, he said. I agree 100%. But you realize that two different writers, two different investment strategies. you know, it's it's one of those things. You know, stock futures rise slightly as traders await Friday's jobs report. Live updates. U.S. stock futures rose slightly early Friday as traders awaited Friday jobs reports. Gotta finish strong, baby. Dow Jones Industrial Average futures gained 27 points, or 0.1%. S&P 500 futures and Nasdaq 100 futures also advanced 0.1% each. Economists polled by Dow Jones are expecting the U.S. economy to have added 170,000 jobs last month, down from 187,000 the prior month. The unemployment rate is expected to have fallen to 3.7%, lower than the 3.8% level in the previous reading. Many market participants are hoping a somewhat softer jobs report will break the fever in bond yields, which have risen sharply and weighed on equities. The 10-year U.S. Treasury yield hit a 16-year high this week, rising as much as 4.884%. It has hovered above 4.7%. There's volatility in the bond market. Joe Terranova, Senior Managing Director at Virtuous Investment Partners, said Thursday on CNBC's Closing Bell. So, one way or the other, tomorrow's job report is going to have a significant impact on which way the market is going to move. Because right now we are moving in such a volatile nature in fixed income, and that's an uncomfortable place for investors to be in. The Dow turned negative on the year this week and is headed for its third straight week of losses. As of Thursday's close, the 30 stock index is down by 1.16%. The S&P 500 is on pace for its fifth consecutive losing week, down by 0.7%. The Nasdaq is about flat. Pioneer Natural Resources rallies on report of possible sale to ExxonMobil. Shares of Pioneer Natural Resources rallied more than 11% in the pre-market after the Wall Street Journal reported the shale driller is closer to reaching a deal with ExxonMobil to sell itself for about $600 billion. The report said, citing people familiar with the matter, that an agreement could be sealed as soon as in a few days. Pioneer could be immediately reached for comment. Exxon said, we do not comment on market rumors. Positive open for Europe. The Pan-European Stock 600 index was up 0.3% in early trade, with insurance stocks adding 1.2% to lead gains as most sectors and major bourses nudged into positive territory. Food and beverage stocks bucked the trend to fall 1.6%. Reserve Bank of India keeps interest rates unchanged at 6.5%. The Reserve Bank of India kept its interest rate steady at 6.5%, in line with Reuters' expectations. The Reserve Bank is concerned We have identified high inflation as a major risk to macroeconomic stability and sustainable growth. RBI Governor Shri Shakikanta Das said in the Monetary Policy Statement Conference. India's August retail inflation came in at 6.83% year on year as food inflation persists. Our monetary policy remains resolutely focused on aligning inflation to the 4% target on a durable basis, he said. A strong jobs market could equal a weak stock market if current trends hold up. Friday's non farm payrolls report will provide a major test for Wall Street, which has been on edge all week about, which has been, um, Friday's non farm payroll report will provide a major test for Wall Street, which has been on edge all week about a surprisingly resilient labor picture. The fear is that if the tight labor market holds up, the Federal Reserve will hold interest rates high and jeopardize the U.S. economy at a critical time. Economists survey the Dow Jones expect that September will show a net 170,000 new jobs, significantly more than that could be provided. A good news is bad news to jolt an already reeling market. The market views all components of the report via the eyes of the Fed, said Quincy Crosby, chief global strategist at LPL Financial. Clearly, the market is hoping for a headline number that reinforces a labor market that has slowed but remains resilient. Earlier this week, the Labor Department reported that job openings posted a surprising jump in August, rising to their highest level since the springtime and reversing a recent trend of declines. Fed officials watched the metric closely as an indicator of tightness in the labor market. Stocks tumbled Tuesday following the report called the Job Openings and Labor Turnover Survey, triggering concerns that another slide could be in store in Friday's account, and the count is also strong. Treasury yields also hit a 16-year high, possibly indicating fear of higher rates from the Federal Reserve. JP Morgan's Marco Kalavnik braces for 20% market plunge, delivers recession warning by Stephanie Landsman. JP Morgan's Marco Kalavnik is bracing for a 20% sell-off to hit the S&P 500. According to the Institutional Investor Hall of Fame, high interest rates are creating a breaking point for stocks, and choosing cash at a 5.5% return in the money market and short term treasury is a key protection strategy right now. I'm not sure how we're going to avoid it, a recession, if we stay at this level of interest rates. The firm's chief market strategist and global research company head told CNBC's Fast Money on Thursday. The S&P 500 closed at 4,258 and 19 cents on Thursday and is on the cusp of a 5-week losing streak. The index is down more than 5% over the past month. Kala- Kalanovic believes the weakness isn't a strong sign. A monster move lower is already there. He indicates a near term bounce is still possible because a lot of hinges on economic reports are over the next few months. We're not necessarily calling for an immediate sharp pullback, he said. Could there be another 5, 6, or 7% upside in equities? Of course, but there's a downside. It could be a 20% downside. He warns the Magnificent Seven stocks. which includes Apple, Amazon, Meta, Alphabet, Nvidia, Tesla, and Microsoft. They're all among the most vulnerable to steep losses due to their historic gains and high rates. The group is up 83% so far this year, carrying the bulk of the S&P's 500's gains. If there's a recession, I think the Magnificent Seven will catch down where the rest is, said Kolanovic, citing beaten up sectors including consumer staples and utilities. Plus, Kolanovic believes consumers are getting dangerously cash strapped due to the economic backdrop. The job market is still strong, but you are starting to see this and the stress in the consumer. If you look at the sort of delinquencies in the credit cards and auto loans, he noted, we remain somewhat negative still. Kalanovic's institutional investors top ranked equity strategies came into the year with the S&P 500 year-end target of 4,200. The index closed 2022 at 3,839.50. Well, I couldn't agree more. Digital assets, stay away from bonds unless it's long term. Not 5 years, we're talking 10, 15, 30-year bonds. Digital assets, the crunch is coming, buy the dip, don't get greedy. Take the 5%, hedge it 5% above, 5% below, and navigate. Stay vigilant on the market, stay educated on the market, and your business. So, this is all the time that we have for today. I want to thank you guys once again for tuning in. Team BlackRock, Blackstone, this is what we do. And we're riding out into the sunset. So, we'll see you guys tomorrow.